Okay, so Tesla stock is on the verge of triggering a bear trap, and if this scenario materializes, the odds are that it will explode again and seek the next resistance level. The recent correction was not strong enough to reverse the bullish momentum and the rally persists. Tesla stock is insane, it is a real bear killer, but how much gas does Tesla stock have left? How far could it go and what it takes for it to reject our bullish thesis? You will learn the answer to these questions in this video. First, my name is Nathan and I welcome you to the Finance Hydra channel. Let's start our technical analysis on Tesla stock. In the 1-hour chart, it feels like this purple trend line, which is connecting the previous bottom levels on Tesla since January 6, is again working as a support level for us. As long as Tesla remains above this purple trend line, a sharper correction in the daily chart will hardly materialize, alright? I mean, it is nearly impossible because first we gotta lose this purple trend line. Unless if in the daily chart we see a sideways correction while the 21 exponential moving average keeps going up, trying to catch up with the price. In this scenario, we might see a sideways correction, but not a price correction. In order for the price to actually drop again, we gotta lose this purple trend line. Speaking of daily chart, yes, we did see a classic evening star doji candlestick pattern, which is a relatively strong bearish reversal pattern, which works 71% of the time according to Bukovsk's studies. And right now Tesla is trying to frustrate this pattern. So if Tesla actually frustrates these patterns, well, we could easily explode again. After all, there are still 29% chances that this pattern is not going to work. And since sometimes it is not going to work well, Tesla is a very good candidate to see this evening doji star failing. So yes, right now we are trying to reject this bearish structure. And if this happens, we're gonna see a bear trap. However, this pattern was not totally rejected yet. In order for Tesla to reject this bearish candlestick pattern, we gotta break the star's high, meaning $214. That's the key point Tesla has to break in order to frustrate completely this bearish thesis and resume the bullish sentiment all the way up to the next technical target, which is $237, $237.40 roughly, which is the next resistance level over here from November 2022. In addition, this key point over here, the 237, is very close to the 61.8% Fibonacci's retracement in the weekly chart. So this is a very nice resistance level to work with. It is much better than the 50% retracement, which did work as a resistance for us right now, but it feels like Tesla, again, it is trying to frustrate this resistance level. What's more, last week Tesla did a classic shooting star candlestick pattern, which is another bearish reversal structure. But if Tesla breaks this shooting star's high, which is at the same time this evening doji star in the daily chart, then it is going to completely reject this pattern. So if Tesla breaks 214, it is going to reject two bearish candlestick patterns at the same time in two different time frames. So let's pay extra attention to the 214. If we break 214, then that's gonna be phenomenal. Probably Tesla is going to explode to the next resistance level because there are no other meaningful resistances until we hit the 237. So we gotta pay attention to this key point right now. What it takes for Tesla to actually frustrate this bullish thesis of yours, Nathan, because you could be wrong, am I right? Of course, I can always be wrong. In this scenario, in order for Tesla to reject this bullish thesis, it gotta first lose this purple trend line. This is going to be a yellow sign in our heads because, okay, the bullish momentum is losing strength. If we lose the previous bottom level over here, then probably it is going to trigger a bearish pivot point, and in this scenario, we are gonna see a sharper correction, maybe to the 180s, maybe to the 21 exponential moving average in the daily chart around 177, 178. Either way, we're gonna see a sharper correction. But remember, since Tesla is in a bullish momentum, pullbacks might be just opportunities to buy, because Tesla would seek a support level, trade at a support level, and near support levels, the risk-reward ratio gets more attractive. And again, since we are talking about a bullish bias over here, you are not doing anything crazy. It makes sense buying Tesla near support levels, all right? So especially considering that in the monthly chart, we just triggered a fantastic piercing line candlestick pattern for the second time since 2019, when it did this piercing line candlestick pattern above a support level and it triggered this monster reaction. Right now, we did a piercing line candlestick pattern above a support level again, so the bias is bullish. I am not saying that Tesla is going to repeat this pattern, because maybe it will, maybe it won't. Remember, trading is not predictive, it is just reactive, but if it does, I'm not gonna be surprised. After all, this is a very powerful bullish candlestick pattern. Now, if we take a look at options, if we analyze options, we might see something quite interesting. Oh, but since we are here, check my website. The link is in the description of this video. And join the top 5% family that can actually make money while beating this market. Public track record, my dear friends, public track record. Now, the maximum pain on Tesla on options expiring this Friday, February 17, is around 170. So we are way above the maximum pain level. So, okay, if Tesla corrects, that's not going to be a huge surprise for us. Of course, price action wise, we have yet to see a crystal clear bearish structure indicating, pointing towards a correction, but still, we are way above the 170 price level. The put call ratio is 1.05, which is quite okay. It is a little bit high comparing to what it was a few weeks ago. It is a little bit high, but to me, it is still okay. Either way, we see many puts around 170, 180, 190, so it feels like investors are trying to protect themselves in this area, but we see a huge spike on calls at a strike level around $200 and again at $250. So we are mostly optimistic, all right? Investors are optimistic. They are cautious, but still optimistic. So breaking the $200 like we are doing right now is quite symbolic, because all these calls are gonna be in the money. So when we see Tesla breaking the $200 like it is doing right now today, this has a meaningful impact on these calls at $200, all right? So this is quite good. So maybe investors will get even more optimistic by the end of the week. Still, price action wise, we have yet to see a crystal clear breakout of this 214 area, but it is quite good to see Tesla breaking the $200. Okay, this is good. This is the first step that Tesla has to take in order to trigger a bear trap over here. So let's pay attention on how Tesla is going to close today, on how Tesla is going to behave around the $200, and if we break 214, we'll know that our most optimistic bullish scenario will materialize for good. I'm gonna keep you guys updated every single day on this channel, so if you're not my subscriber yet, come on. I think I earned your subscription. Subscribe, otherwise you're gonna miss my daily analysis. I really appreciate your support, my dear friends. Thank you very much. Stay safe. Bye-bye.